Okay, so we were doing cash flow from operating activities, and step two we have completed. Step two is that step one was calculation of net profit before tax, and then step two is that we have to add non-operating expenses as well as non-cash expenses like depreciation, bad debts, loss on sale of fixed assets, interest, charity. These are the main components. Then we have to deduct the non-operating incomes, and there are four types of non-operating incomes: interest received, dividend received, rent received, gain on sale of fixed assets. So after doing these adjustments, we will get operating cash profit actually. We will get operating cash profit, and only working capital changes have to be done now in step three. Now, see, your working capital is also part of your operating activity because whatever current assets or current liabilities are involved that are a part of working capital, and creditors, debtors, inventories, these all are concerned with your operating activity only. Now, in step three, we will be calculating cash generated from operating activity finally. Our objective is to calculate cash generated from operating activity. For that, we have done step one, calculation of net profit before tax. Step two, calculation of operating profit. Step three, we will be adding decrease in current assets and increase in current liabilities. Why we are adding that we have to understand. Here I will take the example. Suppose easy one will be think it debtors. Like suppose it is debtors for the time being because both are same almost. Suppose the debtors are on 31st March 2019 it is 1,80,000, and on 31st March 2018 it is 1,40,000. So how much amount has been increased? You can reply in chat box. How much amount of debtors have been increased? Yes, 40,000 amount of debtors is increased. Now, you can assume, yes, very good. Opening balance of debtors was 1,40,000. Suppose opening balance of debtors was 1,40,000 as it is given here. I want to increase the debtors by 40,000. What journal entry I will be doing? If I want to increase the debtors by 40,000, then what will be the journal entry for that? The journal entry will be debtors account debit to sales account. Yes, obviously. So if I want to increase the debtors, then the journal entry will be debtors account debit to sales. Only then my debtors can increase. Or you can say, instead of writing sales, I can say it cash also. Debtors account debit to cash account means if I am giving them goods, that also means that I am giving them cash. So that's why it means that my 40,000 is going out of the business. Can I say if I'm giving 40,000 more credit to my debtors, that means my cash will be reduced by 40,000? Can I say that my debtors, my cash will be reduced by 40,000? Yes. So because my cash is reducing by 40,000, what I will do, I will reduce the debtors by 40,000. I will subtract 40,000. I will subtract 40,000. Now you can see debtors are your current assets. You all know that. And debtors are increasing as comparison to last year. This year debtors are increasing. And that means whenever your current assets are increasing, your cash will be going out. If you are purchasing inventory, that will be also by payment of cash. So in the manner cash is going out, that's why my cash is reducing. And that is the logic behind that I am decreasing the amount of debtors. I'm reducing, I'm subtracting increase in current assets. I'm subtracting increase in current assets. Similarly, if I make 1,40,000 as closing balance, and I do 1,80,000 as opening balance. Now what is happening? 40,000 debtors are reducing by 40,000. Debtors are reducing by 40,000. So if debtors are reducing, when debtors will reduce? When debtors will reduce? If my opening debtors were 1,80,000, and now I am saying my debtors are now only 1,40,000. So in what circumstances debtors can reduce? Can you tell me? Only when I will be receiving some cash from the debtors. If my opening debtors were 1,80,000, and suppose I received a cash from them 40,000, so I will be doing the journal entry cash account debit to debtors account. So in that case, my cash balance will increase or decrease. In that case, my cash balance will increase or decrease. It will increase. So because my cash balance will decrease, cash balance will increase, sorry. So that's why I am adding decrease in current assets. Now I hope the logic is clear why we will add decrease in current assets and why I will subtract the increase in current assets. These 2 points are clear. Okay. Now, similarly, if your current liabilities are increasing, you have to leave the bank overdraft and cash credit, because bank overdraft and cash credit will be always considered in financing activity. So except these current liabilities, all other current liabilities like outstanding salaries or bills payable, creditors, these will be considered here. Similarly, if your current liabilities are increasing, so that means you are getting cash from your creditors. So that's why I am adding increase in current liabilities. And if your current liabilities are decreasing, you can take the example of creditors. If your creditors are decreasing, that means you are paying cash to your creditors. You are paying cash to your current liabilities. Only then they can decrease. So that's why decrease in current liabilities will be subtracted. So now I hope these all 4 additions and subtractions are logically clear. Why to add any decrease in current assets? Why to subtract any increase in current assets? Why to add increase in current liabilities, and why to subtract decrease in current liabilities? So if you will be logically clear about that, you will never get confused. After adding these 4 and subtracting, you will get cash flow from operating activity. So this way, your third step will be completed and you will reach almost to the cash flow from operating activity, except 1-2 more adjustments will be there. Now see question number 4. We have to calculate cash flow from operating activities in this question, we have been given surplus in statement of profit and loss. Opening balance is given and closing balance is given. So what is the formula for that? Closing minus opening. So if I will do closing minus opening, obviously I will get here. So closing balance is given 3 lakh and closing balance, opening balance is given 2 lakh. So obviously my net profit before tax and extraordinary items will be 1 lakh. 3 lakh minus 2 lakh, 1 lakh. So this is the first step when I want to calculate cash flow from operating activity, that I will calculate net profit before tax and extraordinary items. Obviously, I have to add dividend, tax and reserves in that, but you can see no such information is given in this question regarding dividend, tax and reserve. So this only will become my net profit before tax and extraordinary items. Now, then I will come to the second step. In second step, I have to add my non-operating and non-cash expenses. Add non-operating or non-cash expenses. So I will see that debtors are my current assets, or you can say bills receivable were there. I should put it. Then accumulated depreciation. Now, if you remember last year chapter of depreciation, there you have prepared a provision for depreciation account. Do you remember that? That provision for depreciation account is actually known as accumulated depreciation. If you remember, thereon the depreciation keeps on accumulating. We don't charge it to the asset account. So you see, last year the balance was 3 lakh and now the balance is 20,000. So how much you feel, how much depreciation you might have charged in the current year? Last year balance was 3 lakh and now the balance is 3,20,000. So how much of the depreciation you would have charged? 20,000. So depreciation charge during the current year will be 20,000. Then you can see outstanding rent, it is a current liability. Prepaid insurance, it is a current asset. Goodwill, it is an intangible asset. But you can see goodwill balance last year was 2 lakh. And in the current year, the balance of goodwill is 1,60,000. Why it has been reduced? Just think over the reason. Why it has been reduced by 40,000. Can you tell me? Because it is goodwill written off. This much goodwill has been written off. That's why it is reducing here. So goodwill has been reduced by 40,000. That we will be adding here. Then inventories are there. These are current assets. So we will do these adjustments in the third step only, not in the second step. Current assets and current liabilities will be considered in the third step. Right now we are concerned about only operating, non-operating expenses and non-cash expenses and non-operating incomes. So I have to add 60,000.
So after adding 60,000, I will get operating profit before working capital changes. I don't have any non-operating income here. So my operating profit will be 1,60,000. Now I have to adjust decrease in current assets and increase in current liabilities. These are to be added. And any increase in current assets and decrease in current liabilities has to be subtracted. Now I will see the current assets and current liabilities. So first of my current asset is bills receivable. If you are getting, please let me inform in the chat box. If you are feeling any confusion, any problem, please inform me. Bills receivable is a current asset and it is increasing by 40,000. So increase in current assets will be subtracted. Bills receivable $40,000. Then outstanding rent, it is a current liability. It is increasing by how much amount? It is increasing by 24,000. So outstanding rent is current liability. It is increasing. It will be covered here. Outstanding rent 24,000. Then prepaid insurance is your current asset. It is decreasing by 2,000. So prepaid insurance is a current asset and it is decreasing. Prepaid insurance. So decrease in current assets will be added. This much 14,000, yes, 2,000 it is decreasing. So it will be added. Then goodwill we have adjusted in the second step. Inventories are increasing by 40,000. Inventories are increasing, so increasing current assets will be reduced. See, your inventories can increase only when you will be purchasing the inventory. So that will reduce your cash. So inventories will be subtracted by 40,000. Okay. Now 80,000 I have to subtract and I have to add 26,000. So 1,60,000 plus 26, it will become 1,86,000. And 1,86,000 minus 80,000. Finally, I will get cash flow, or you can say cash flow from operating activity. It will be 1,06,000. So this way we have completed one part of cash flow statement completely. That is cash flow from operating activity. Only few little very small points are there that we will be discussing later on. But almost this is completed from my side. You please practice cash flow from operating activity sincerely. This is the 50% of the question about. So please do it sincerely. Practice it thoroughly today, and whatever doubts you feel, you can inform me.